Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the market. Let's kick things off by having a look at today's economic calendar.
Today's economic calendar only has one black star event, as a revised reading on the fourth quarter US GDP is due later in the day, with any continued signs of resilience in the US economy giving the Fed more headroom to keep rising interest rates.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, the dollar strengthened after the US Federal Reserve meeting minutes showed policymakers are determined to use a slower pace of interest rate hikes to tame persistently high inflation. The greenback rose in late trading, sending sterling down 0.58% to $1.20, while the euro fell 0.44% to $1.06. The dollar index was up 0.4% at 104.57. The Fed meeting minutes on release indicated that a few officials could have supported a 50 basis point hike in the last meeting, though most backed the 25 basis point outcome. This is certainly supportive of the US dollar, which is slightly stronger now against most other currencies. The theme throughout February has been a bias towards higher rates, and the minutes are consistent with that perspective. Now let's have a quick look at our analysis on USD-ZAR. USD-ZAR is currently hovering above that primary support level at 18 Rand to the dollar. We can also see that it is perfectly rejecting our 4-hour dynamic support levels, which is our 21 and our 8 EMAs. A nice clean break above our 8 EMA around that 18.22 Rand to the dollar level could spark further buying opportunity on this specific pair back up to our next primary resistance level, which is at 18 Rand 50 to the dollar. Now let's move over and see what's making headlines on Wall Street. Cracks are winding in the early year rally in stocks. For weeks, stocks have largely withstood a rise in treasury yields that has come amid signs that the Federal Reserve may have to rise interest rate higher than expected to cool the economy and tame inflation. Market participants warn, however, that yields are reaching a danger zone where equities quickly lose their luster. Yields on a 6-month treasury, for example, are at their highest in nearly 16 years, offering investors 5.02% on an asset mainly considered far safer than stocks. Stocks are still sitting on a sizable year-to-date gains, though some of their rally has melted away in the recent days. The S&P 500 is down 4.4% from its recent highs, but remains up 4.1% year-to-date. The index fell more than 2% on Tuesday, its worst single-day drop of 2023. Moving over to our analysis on the S&P 500. The S&P 500 is currently hovering just above that primary support level at $4,000. However, should this support level be broken, we could see a sell-off back down to our next primary support level at 3,900. Should this support level, however, be respected, we could see a slight correction back up to that 4,050 level. Now let's move over to commodities. Oil prices fell by $2 per barrel to their lowest in 2 weeks, as traders became more concerned that the recent data will prompt more aggressive interest rate increases by central banks, pressuring economic growth and fuel demand. Brent crude futures fell $2.45 or 3%, settling at $80.60 per barrel. WTI crude fell $2.41, also 3%, to end at $74.05 a barrel. Looking at our analysis on crude oil, we can see that this specific commodity is currently settling at $74.19 a barrel. We could see a correction back up to our 8 EMA, which is around that $75 a barrel level, after which we could potentially see a further sell-off back down to our primary support level at $72 a barrel. Gold prices are nursing losses for the week, having dropped almost 0.5% yesterday as the dollar hit a 6-week high on fears of hawkish Federal Reserve comments, with focus now turning to the upcoming economic data for more cues on the US economy and monetary policy. The Personal Consumption Expenditure Price Index for January is due on Friday and is expected to reiterate that inflation remains sticky throughout the month. The reading is also likely to attract more calls by the Fed for a sharper interest rate hike in the upcoming months. Looking at our analysis on gold for today, we can see that gold is just above that 1,820 primary support level. We could potentially see a correction back up to that 1,840 level, which is also our 4-hour 21 EMA, our dynamic resistance level during today. However, should pressure consist and this support level at 1,820 be broken, this could spark a major sell-off back down to our next primary support level at 1,780 an ounce. And finally, let's finish things off with cryptocurrencies. Bitcoin fundamentals seem to be improving. Popular on-chain Bitcoin analyst Willy Woo has revealed that data appears to show that the flagship cryptocurrency fundamentals are now improving at a time in which Bitcoin is entering the reaccumulation phase of the cycle. In a tweet, Wu noted that Bitcoin Fundamental Strength Indicator, which tracks the strength of 17 fundamentals and technical indicators, is no longer overheated and starting to rise.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the force be with you. Cheers.